Welcome to RenMac Off Script, where we open discuss markets, economics, policy, history, and life. It's the 3rd of May, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account at RenMac LLC and our LinkedIn page. And we actually have a trial newsletter if you're interested in that, kind of looking at some of the different things, the topics, very light RenMac, but if you're interested in that, certainly let us know. Big week, the first Friday of the month, Neil. That's always payroll, but the first week of any month is always big with PMIs, and we had the Fed this week. What was the highlight of all the data points and things that happened? What was your highlight this week?
My highlight this week was the New York Knicks advancing to the Eastern Conference semifinals. I feel like I'm reliving my youth with the Knicks meeting the Pacers.
That explains the kid and play haircut you got going there.
Well, I mean, back then I would used to rock the mushroom cut, as most kids did. Now I'm going with the I guess the Proud Boys look. Anyway, yeah, I mean, I think the number kind of speaks for itself. The economy is not getting away from the Fed. I think the important thing in the jobs number this morning was that average hourly earnings over the last 3 months are up just 2.8%. And over the last year, they're up just under 4%. So if you think about labor productivity over the last year, the wage data, in my opinion, broadly consistent with the Fed's inflation objectives. And so all we're really waiting on at this point is the realized inflation data. And if that shows progress over the next few months, as we anticipate, it's going to continue to firm up these rate cutting expectations that you're now seeing embedded in the fixed income market pricing.
I mean, bonds are having a massive day today.
As they should.
Yeah.
As they should. I mean, obviously, I mean, a week ago, I mean, people were talking about maybe there's a 20% chance they hike, and now we're talking about cuts in September and December, right? So you can't rule out July, frankly. I mean, if you see a run of weaker inflation data, why would you want to do that? And a lot of the forward-looking indicators that we monitor continue to suggest an easing up of inflationary pressures in the economy. If you look at wage growth in terms of posted jobs, that data is from Indeed. It shows continued moderation. We saw data on quits earlier this week. That shows continued moderation. There's just not a lot of turnover in the labor market right now. And so, yes, the employment cost index perked up, but broadly speaking, the data point to an easing of inflationary pressure in the labor market. And when you think about continued disinflation coming from housing rents and certain area of core consumer goods, I think there's a reasonably strong case to make for weaker inflation. Powell made that case this week, which is why I think he was interpreted kind of dovishly. So, I mean, inflation's slowing and the economy is not getting away from the Fed. That is fodder and catnip for the soft landing crowd.
So the prices paid this week ticked up pretty decently. What do you make out of that?
I think that just means that oil prices were up over the last year. That's all that means. It doesn't tell you anything about what's going to happen. I think what's important is that the vendor deliveries index in the ISM actually moderated, right? So to the extent, historically, the vendor delivery index has been used as a forward indicator for price pressures, right? So if delivery times are improving, it's easier for factories to get product out the door on time. That should mean that, price pressures ease as well. So I think the price is paid. Yes, it perked up, but that probably signals that we're closer to the end of something than the start of something.
And Steve, when we look at consumer sentiment, I mean, it really is in the bottom end of the range. It's kind of hard to imagine that that's the case with what's essentially full employment, right? The unemployment rate ticked up a little bit, 3.8 to 3.9. but what, is it a lack of coherent messaging? What is going on from the Biden's camp? What are they looking at and just saying, why can't our call resonate?
Well, what you've seen is a retirement of the term Bidenomics. There are several pieces, both from Axios and USA Today, just studying the numerical decline from the number of mentions of last year versus the beginning of this year. I mean, you have Treasury Secretary Janet Yellen going to Arizona talking about threats to democracy rather than touting the economy. And they're probably seeing the same data that everybody else is seeing, which is declining consumer sentiment. You see inflation reemerging as a concern for voters, particularly in the swing states, which I'm sure is a great concern to the White House. And like people may have jobs, but they probably don't feel great about their prospects. I mean, if you not have received 20% wage increases, which I don't know that many people have, you're falling behind. And your prospects, may not be necessarily that great. Inflation impacts everybody. Most people concerned about unemployment usually are those that don't have jobs. So I just think in terms of what's resonating, that's probably really, I think, breaking through, and why you see them really pivoting away from the economy. Now, is it possible things could get better? I mean, yeah, if you look back at April, it was probably a tough month. You had some, I would say, less encouraging economic data out, at least at the beginning when a lot of these surveys were conducted. You had a lot of uncertainty about what was going on in the Middle East. I don't know that these things are necessarily going to abate. But again, when people sort of have to make that more or less determination as their view on the economy, I think the Biden administration is sort of running out of time there. I think that's probably the big electoral concern, particularly as people start voting in September. You don't have till November now to sort of try to change that message. So we're getting dangerously close to I think June, and it's been 3.5 years of I guess at this point of people's experience with the economy.
Yeah, but Steve, if there's anybody that can screw that up, it's the Republicans, no? I mean, they had a better economy to run on in 2022, and they
Well,
totally screwed that
it
up. I mean,
depends on how you
heard
look at
about
it. I mean,
red wave,
I
big
think
gains in the House,
I
and
would push back on that. If you look at the data, the Republicans actually won the popular vote by 3%, which a lot of people didn't anticipate. Now, you could look at some of the expectations where Republicans didn't necessarily do a good job managing those in terms of the Senate. They fell short on many of the closer contests there. They have a more favorable map in 24 than they did in 22.
oh,
The
come on.
House,
That's the argument like the Democrats make in presidential elections. We won the popular vote. Well, it doesn't matter. I mean, the
I'm
popular
just
vote
saying, you're
doesn't
talking
matter
about
in
who
this.
actually where the resonated. I explained to you what happened there in the Senate. In terms of the House, you're applying historical data, which may not reflect a lot more gerrymandered and partisan districts. I think at this point, whoever wins the presidency is going to carry the House. I think regardless of who wins the presidency, Republicans should control the Senate. How much that majority may depend on Trump and his ability to carry those moving forward. I think the better question, though, is, the economy was listed as voters' main concern in 22, and Democrats were able to overperform expectations. I'll grant you that. But I think one thing to consider is the midterm electorate is smaller. Now, that used to favor Republicans. I think the suburban shift probably made that more favorable to Democrats. But a larger presidential election with Biden on the top of the ticket, being held accountable now, which he wasn't in 22, I think there's more uncertainty there. So I think that's what Republicans probably hope for this time.
And where is Biden lining up on these battleground states? Has there been any shift there, any widening of the gap?
I think last week we talked about the mean reversion in the Bloomberg poll. There have been several other polls that come out that sort of reaffirmed this mean reversion. I mean, in short, he's behind in most, with the exception of Michigan, which gets into a lot of the conversations around his policy towards Gaza at the moment. But while that, may be benefiting him there with those voters, that could be costing him with some Jewish voters in Pennsylvania. I think it was a CBS poll that focused on those three blue wall states, had Biden up in Michigan, but trailing Trump in Wisconsin and Pennsylvania. And then Emerson College poll again showed Trump performing well in all the battleground states. So, nobody's really pulling away at the moment. But I think at this point, given how polarized the country is, you wouldn't expect that. I think last week too, I just sort of tie that into, we recorded it before Biden committed to debating Donald Trump on Howard Stern. And there's been a lot of speculation as to whether Biden's team shares his desire to debate Trump. I mean, personally, I think getting that risk reward analysis, if Biden's trailing, it needs to do something to change the trajectory come, late summer, early fall, then he probably will debate. If he feels confident in his team doing his lead, he probably has more to lose than to gain by doing it, and they might look for a way to sort of wiggle out of that. And if polls are about where they are, then maybe it is a coin flip.
Well, I mean, to Neil's point about the Republicans shooting themselves, let's talk about Speaker Johnson. I mean, are they going to give him the boot next week, or does he have a little bit longer lifeline here?
Marjorie Taylor Greene has threatened to bring the motion to vacate next week. If she does
By the
that, they
way,
can bring
just
it
out of
back to this.
curiosity, at what point do you start using your middle name like in everyday conversation? So I'm gonna just from now on, I'm gonna be going by Jeffrey Scott DeGraff. All right,
When you're
just
an
to
assassin. In this case,
See,
he's assassinating our own party.
is that what it? Yeah, that's true. That's exactly
AFC.
right. John Wilkes Booth, Marjorie Taylor Greene. Got it.
She's going to bring it up. That it's going to be uneventful in the sense that the Democratic leader, Hakeem Jeffries, has already said that Democrats are going to support a motion to table it, which is a fancy way of basically saying there'll be enough people to vote to not bring it up for a vote. I think, Green feels some political pressure to follow through on this. It's interesting calculation on her part because she sort of made a name for herself by trying to align herself with Trump, who doesn't want House Republicans to do this because it's not going to help his electoral prospects. The more distance she creates between him and her moving forward, I think something to watch. I don't think Republicans are going to keep Johnson in the speaker or leader position, depending on the outcome of the election after November. I think a lot of them just sort of want to get through the election and then maybe find somebody else at that point. And I think that's probably the more likely case to see him removed. However, Johnson should be careful because he's trying to put Democrats in uncomfortable positions on voting on positions that divide their conference. The more that he does that, the more at some point Democrats are going to go to Jeffries and say, why are we saving this guy? So that's again going to be something to watch moving forward.
I mean, it feels like I know that all publicity is good publicity, or whatever that saying is, but it feels like these guys should just shut up. Like, just, kind of, you already have the momentum going your way where people are more and more, I don't know if it's distrustful, but certainly less and less interested in Biden. Just kind of let that momentum go. I mean, why stand in the way and make it look like a clown car? I don't understand that.
It's less of a team approach and more of sort of an individual political incentive. So you look at somebody like Matt Gaetz, who, did the motion to vacate McCarthy. I mean, that was to bolster his position for running for governor in Florida at some point and sort of solidify that position there amongst the right, which that's where his threat's going to be in Florida. It's going to be winning that Republican primary where appealing to the right is really important. For Marjorie Taylor Greene, it's about raising money. And that sort of comes support there from the right. And then, cool, what can you do with that money? That way you get the power to support other candidates that are more like you. I'm not defending it. I'm just stating that's why, the incentives don't always align for members from the same party.
Speaking of raising money, how about
The
this
team
for
sport, though. Together, team. Together, everyone achieves more.
I,
When they get that through their heads, maybe they'll start winning more.
I guess go back to your district and personal political incentives. I don't know that they always align with the team goals, but
um, this? I don't even know exactly what it was Fraternity that overran the Palestinian flag and pulled it down, and then put up the American flag, and now is what are they, $300,000 in a GoFundMe
it's over
campaign?
500,000 at this point.
That's unbelievable. That's a lot of beer.
I mean, I'll just say from a political perspective, you saw Biden come out and make a speech that wasn't scheduled. I think that tells you where they feel politically vulnerable to that.
I mean, without getting down this rabbit hole too much, did Colombia do the right thing? Yes. Did they do it uh, expeditiously enough to matter, or did they look more reactionary? And I mean, clearly Harvard lost the battle, right? I mean, UCLA is losing the battle, but did Colombia get it right, or did they wait too long?
I mean, it depends on your definition of getting it right. I mean, they waited a long time. They empowered a lot of people. I mean, I heard Northwestern was, negotiating with these people. And it's not an apples to apples comparison, but I mean, if I had some intruder in my house, I wouldn't be negotiating their exit. Okay. I might, if they're lucky, get a warning shot to them. But that'd be it. And I think a lot of people probably feel the same thing. Why are you sort of incentivizing this behavior? And if these people aren't students, then you really shouldn't be negotiating with them. I think at this point, from a political perspective, the White House is hoping that, okay, these graduations are going to occur and that maybe these people are going to go home. But again, if they're not students, are they going to go anywhere? I'm not sure.
Yeah. You have a right to free speech, and we absolutely would defend that. But the minute that you start to make that more of a harassment and break those rules, you are expelled. So, um, well, from our perspective, what we're seeing in the markets, we talked about the pillars of a low, internal, external oversold conditions. Both of those we had. Really, the one that was the holdout, and you don't always need it, is sentiment. The put call ratios not jumping to levels that are, really kind of that stress where people are trying to protect against the downside. We'd love to see that because it increases the probability that you're making some type of tactical low. But again, you don't need to have that. The risk in our camp was the 10-year yield. The risk was that we break through that 480 level, which was resistance. We didn't think that was going to happen, but it was a tough call. We didn't pound the table on it. We're not pounding the table on it, but we break yields below 435, and I think a lot of good things happen. That sets up for the next leg, which from a seasonal perspective is pretty consistent for an election year going into the summer. So you tend to get a low sometime in the mid to late spring, and then a decent run into basically the conventions in the summer. So we'll continue to watch that. I think the most important thing right here from a global perspective is what we think is a turn in China. There's some indications of momentum there. That comes off of what was an extreme negative, excessive alpha reading for us over the last 3 years. You basically hadn't seen risk-adjusted returns as bad as this in China for a couple decades now. That's the environment at which, not just because, but it's the environment which bottoms tend to develop. We also saw sentiment extremes with ETF outflows that really were unsustainable. So most of the weak hands were gone, and even I'd say some of the strong hands were gone, and that creates a vacuum. So we are starting to see some improvement there. Steve, I know you had a call this last week on trade. Anything there from obviously it's all China related, but anything that looks like it might be a tailwind for China and Chinese equities over the next year or two?
Sure. Well, honestly, it really depends on your time horizon. I guess in the short term, maybe the tailwind is this idea that China is trying to export their way out of a slowing economy. Something they've done in the past, but I guess again, to more the long term, maybe headwinds, something that the U.S. is raising now and will likely continue to raise, and that's this idea of overcapacity in certain areas, particularly a lot of these green energies. But then you get into issues like steel, and that's where you've seen the Biden administration, again, expressing that's not going to be the U.S. but Europe that doesn't want to see their domestic industries hurt by this. It's a very strategic play, and China's basically saying we don't care. We're going to proceed with this. So at some point, something's going to have to give. And I thought one of the things that was particularly important that we discussed yesterday, and that was overlooked in Biden's steel announcement, was this idea of addressing circumvention. And that is basically China rerouting things like electric vehicles, steel, solar panels through Mexico to avoid U.S. restrictions. That's something that going to hurt maybe sort of some friendshoring efforts, not only in Mexico, but again, if it's followed through on, might hurt China's growth prospects in certain areas. So again, it depends on your time horizon. But that was a subject of yesterday's trade call, and encourage people to listen to that if they get a moment.
Yeah, well, one of the things it's confirming this China call for us is what we're seeing out of materials, right? And it's just not just copper. Obviously, gold's had a breakout, looks great. Nice consolidation there, looks viable. Copper breakout looks great. We're also seeing it in aluminum. We're seeing it in commodity chemicals. So there appears to be, under the surface, some of these raw materials that continue to support some type of growth, whether that's a shift more globally than it is here in the U.S., or maybe it is a synchronized growth environment. We will see, but like what we're seeing out of all those. Neil, what's on the ticket next week in terms of data points?
It's pretty quiet. But speaking of consumer sentiment, we will get the May consumer sentiment number, University of Michigan. That'll be a May data point. Remember that consumer sentiment is basically a function of three things: gas prices, stock prices, and employment. So how you feel about those things will help you determine what consumer sentiment is going to do. So that'll be the main event. Other than that, it's pretty quiet, actually. We'll get data on the senior loan officer survey from the Fed. I'm curious to see how lending standards are easing or not. Obviously, that's been a big source of discussion in terms of, particularly after SVB, how the Fed's policy gets traction, tightening credit conditions. And we'll have a bunch of Fed speakers, sort of second tier stuff. But sort of a calm week next week after a busy one this week.
Who the Knicks play next?
The Indiana Pacers.
Mm.
Game on Mondays.
There
Thankfully, that one's starting at 7:30.
I would suggest flying to Indianapolis to watch it versus the Garden. Substantially cheaper.
Lord knows New Yorkers can. I mean, anyway.
Steve, what's going on in the swamp next week?
Outside of the back and forth on Johnson, I think the thing to watch will be whether or not Congress can pass an FAA reauthorization bill by Friday. My guess is they will, but the headwinds, pun intended, will be on what additional ornaments can be hung on the Christmas tree. Just few legislative vehicles leaving the station at this point in the year, particularly presidential election year. And that's when you get into, could things like the pot banking bill hitch a ride, stablecoin legislation, bill to raise fees on debit cards. I'm skeptical that those things will be included. You have a lot of Republicans saying they'd like to have separate votes on that. But we'll see. I think right now, Senate adjourned. There's no agreement on amendments. So that'll probably dominate most of next week, at least on the Hill.
From our side, we're going to be watching key levels on the S&P 5122, which is the 50-day moving average, getting through that, particularly if we can punch through that with some type of breadth, called a 90% breadth day. That'll really start to set the markers for a resumption of the uptrend. We think the uptrend's in place anyway. It's just a matter of whether or not this little correction or consolidation is over. 49.54 is an important level there. On the 10-year yield, 435 remains the key level to the downside that really starts to break the back of the bear market in bonds and leads towards lower yields or maybe a little bit more stability in the long end of the curve. So we'll continue to watch that. And then Bitcoin. We think Bitcoin has broken a tactical top through that 59,000, sets its sights somewhere around 50,000 to the downside, which is the ascending 200-day moving average. I say around 50 because it is a moving target that will continue to ascend as we go. But certainly it's still within the context of a longer-term uptrend and looks to be viable on any oversold condition. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter. And if you'd like some deeper insight, RenMac Access at renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you.